due diligence. So this is really our homework stage. This is about saying we really need to make sure we research every little nook and cranny and aspect about a property before we commit a dollar. This is the final stage of research. So you've got to remember, in the foreclosure market, I mean, you know, it's the same here in Australia. Once you hand over the money and you've bought the property, it is a done deal. You are locked in. It's just that when we're here in Australia, we can sort of get out of it a bit more easily. In the US, that's a bit more tricky. So I guess the comments that I want to make about being careful, what you want to make sure of is that if you do your due diligence properly and you tick all the right boxes, then you should never end up in a situation where you think, God, I've purchased a lemon. Bad experience has left a lot of Australian investors to withdraw from the market altogether. But really, if you're doing proper due diligence, then that should never happen. Don't forget that it really is a buyer's market right now. So what that means is that everyone's at the mercy of you. You are the one with power going into that market. So some of the things to think about: you've got to narrow your selections, you've got to work out your risks, what sort of structural or rehab issues need doing, all associated with costs for settlement, cost to insure, rental expectations, and you know, there's a whole list there. And what I'm actually going to do now is just go through the really key points for all of those issues. So there's 3 levels to finding the market that we talked about earlier, and we're really now at that bottom level, so we're looking at the micro indicators. So micro indicators it's just a word that I've used to describe how you might look at something, not just at a suburban and city level, but really getting down to a street and neighbourhood level. So you've got to go back to all those grassroots indicators that attracted you to that area in the first place and say, well, look, let's now apply it to this house, this street, this neighbourhood. So what I'd actually say is, for example, things like crime rate. If you're looking at crime rate for a city, that's not necessarily going to give you a good indication of whether the neighbourhood that you're looking at is actually somewhere that people want to live. So looking at it at a street level. Now, one of the things that I really want to flag for you guys, and I think John touched on it earlier, is that there are plenty of really beautiful properties in the US. But they may even have good numbers, but the reality is they may not make a good investment. So it's all these grassroots, sort of more subjective factors that are really going to help you decide whether to settle on a property. So desirability. Now, this is a word that I really love. You want to buy properties that are highly desirable. You've got to think like a local. So you think, would you want to live there? You know, I mean, maybe that wouldn't be the case. Maybe you wouldn't want to live in these properties, but if you were a local, would you want to live there? You know, looking at lifestyle things is really important. So things like, you know, infrastructure, what it's close to, how good is your public transport, hospitals, schools, and so forth. Other things to think about is you really want to get a very good handle on your vacancy rate. And really the easiest way to do this is to talk to a number of property managers in the area. Now, they're all going to give you slightly different opinions, but really what you're trying to do is corroborate and just get a feel for how long properties stay on the market. You also want to get a feel for what the average price for property in the market that you're looking at is. You never want to pay substantially above the average market rate for foreclosures unless there's a really good reason. The other thing you want to make sure of is that you're comparing apples with apples. One of the big pitfalls of looking into the US market is that sometimes it won't make sense to, for example, compare a colonial 3-bedroom home with a bungalow 4-bedroom home. They're just slightly different. So when you're looking about trying to understand the prices of product and prices of property, make sure you're comparing apples with apples. Some of the more subjective things that you guys might look at when you're trying to assess a neighbourhood are things called the care factor. So what that means is when you drive through a neighbourhood or when you walk through a neighbourhood, you know, are the gardens well kept? Are the houses well kept? Do people take pride living in that area? The graffiti gang factor. So the US is notorious for its gangs, and graffiti is often more than just an act of vandalism. It's actually a way of marking territory. So if you see in graffiti, then you know something to be mindful of as a red flag. The car factor. Now, in a lot of these places that you might invest in, if you drive there through the day, there'd hardly be any cars around because everybody's off at work. But if you drive through a neighbourhood at your dinner time or a time when families are coming home, you can see what sorts of cars people drive. You can get a sense for, are these people who have nice looking cars or are they all completely beaten up bombs? The ownership ratio. So what that means is one of the rules of thumb that a number of property experts in the US talk about is that they like to buy in areas where the level of owner occupancy is above that 20 to 25% mark. Now, the easiest way to find that out is to actually look at tax rolls and things like that. where you can see if the address on the tax roll is the same as the address of the property, then it's usually a good indication that it's owner occupied. So the bottom line is, when you're looking at particular properties, you've got to look beyond the numbers. And it's not even just about the aesthetics of the property, it's all those other factors in terms of, do people want to live there? Is it a desirable place to live? I'm aware that you can buy properties for $1 on eBay. The issue is that, firstly, forget the fact that you might be buying a prior owner's debt, but are you buying something that's just going to cost you headaches in the future? Desirable properties are where people want to actually live, and they're the ones that are going to give you guaranteed yield and income year after year. So what we want areas where people want to live, where demand is high enough, where housing is affordable, but we don't want to be buying in areas where there are high volumes of foreclosures in the same street. So that's where you're getting into your ghost town type properties that we were talking about before. You also want houses that do have street appeal. So aesthetics isn't something that I place a huge amount of value on, but it's got to be at that base level where it's appealing enough that someone would want to live there. The size of the property would definitely be a consideration if you're looking to rent to families or couples or that sort of stuff. And areas of stability and growth. And again, this is all coming back to information you would have already gleaned, but really now you're putting it all together and saying, well, is this a property I want to invest in? You want to know how rentable the property is. So is it in an area where the rental demand is very high? Other things are, like, if you know that you could buy a property in an area where you're going to recover your money over the next 4 to 8 years, you might say, look, I'm really not interested in income, but why wouldn't you buy that? Price doesn't always reflect location and value. And as I was saying to you before, the foreclosure market is in such a mess that sometimes there is no relationship between whether a property is a good property and its price. Sometimes there are properties that just slip through, that get overlooked. The volumes are so high. So no, price doesn't always reflect the value or the location.